So what I want to do today is actually present you 3 different scenarios in which, Bitcoin may bottom, okay, and some of the signs that you want to be looking out for, okay? I'll tell you what I think is the most likely scenario, okay, given where we're at. And and then we'll have a look at a few other possible scenarios so that you're basically well prepared and you know what to expect. If you like the video, please go ahead and give it a like down below, subscribe to the channel. I try to get these videos out quite frequently to help you navigate the market and stay on the right side. Okay, so let's get straight into it. First thing is, let's just have a quick look at basically where we're at and the key levels that we were looking at. So we were looking obviously at the 40k level over here, which I'm just marking out in red. And as soon as we lost that, we said, okay, we want to be either in some sort of neutral position over here, whereby, if we break this, then basically the thesis for some sort of, higher highs and higher lows uptrend is not currently playing out. So time to get neutral. And then I was saying, obviously, for me, personally, cash position at about 38.6 once we broke this, and like we said, we get some higher time frame closes on the weekly, then we're expecting more downside, and that's exactly what we're seeing. Okay, so from here I would definitely expect lower prices. How we get there, I'm not exactly sure. Maybe we start to come up, retest a few zones, maybe we just capitulate straight down, but essentially that's what I would be expecting. We're in a severe downtrend, like sentiment and everything is like super poor at the minute. Everyone's like panicking with current price action. So that's what I would expect. We can see that obviously as well as losing, a lot of key moving averages, and we're getting this big cross on the fib EMAs. We also broke this key area of RSI support, which we were talking about, that basically since we had, come up and held during our uptrend, okay, and we held it at around 30k a few times. Now we are starting to see ourselves fall below this, so definitely a good chance that we might start to move further down here into maybe oversold regions on the weekly. So just look out for these things, and it's basically just telling you that momentum is to the downside. Sellers are obviously in control at the moment, but do expect a lot of volatility, and there's going to be bounces and stuff, and unexpected bounces, just when you think that we're probably going to absolutely shit the bed and completely fold. So yeah, just watch out for the volatility that is going to be to come. Taking a quick look at some of the major indices and the DXY, we can see we are getting some strength in the dollar, which again is putting a lot of downside pressure on Bitcoin. 0.5% moves, 1% moves in the Dixie on a daily basis is actually really strong, okay, and can have significant downwards pressure on not just equities, S&P and Nasdaq, but Bitcoin as well. And be sure, right, that if the S&P drops and continues to tank down further, then you should expect Bitcoin to follow suit. Okay, so they're definitely going to be correlated, and it's all basically to do with being risk on, risk off. And at the minute, obviously, there is a lot of risk off in the markets, and you can see that if we just take a quick look at the S&P, you can see that we're absolutely cratering out of this channel over here, and just creating more downside pressure, and the same thing for the Nasdaq, but I won't get that up. You can imagine essentially it's a pretty similar chart to where we're at. But until these things resolve, just expect more downside pressure. And probably the best thing for you to do is, if you're comfortable DCAing, okay, this is not to give you advice and tell you what to do with your money, but if you're comfortable DCAing into projects and then into Bitcoin at these, lower prices and starting from here, maybe laddering in, then I think that's a totally reasonable strategy to do, because I think when you do look back in time in 2, 3, 4, 5, 6 months, a year or whatever, you'll probably be glad that you did. And remember, periods of key fear always present the maximum opportunity, and it's always when you see it the least. People think that we're going basically straight down to 30 and we're just going to completely crater it down, which we might, okay, and I'll show you the outcomes in a moment. But I think for holding spot at the moment is not such a bad idea. I think it looks okay as an option, but yeah, you know, until this resolves itself, you might want to wait as well, which is totally fine, to stay on the sidelines and basically wait for some sort of signs of a bottom, okay? And like I spoke about before in the last video, the signs that I'd be looking for of any immediate bottom, okay, is going to be some sort of high volume capitulation, okay? It doesn't have to happen, okay? But, you know, at the moment, I'm just looking at the Coinbase chart, right? You know, we're getting some volume here, but we're still not quite at the levels of, you know, these levels over here. We got higher selling volume, you know, back in about a year ago, when we dropped from 42 down to that 30k region. So, you know, things can really start to accelerate and actually start to get a little bit uglier, okay, from current prices. So just something to bear in mind. So let's get into 3 different scenarios, which I think is probably quite likely to basically mark out some sort of bottom, okay? And what I'm gonna do first, I'm gonna start off with the most likely scenario, and I'm gonna show you why. So, scenario number 1 is going to involve, okay, sweeping these lows at the 30k level, which to me seems like the most plausible option, okay? And then maybe finding a bottom somewhere between 30k and 20k, somewhere in this region, okay? And we can mark out some key levels as well that we want to look out for, right? So this level should provide some support, at least in the short term. If we create a straight through 30 and we come down here, I think that we will find buyers stepping in, okay? Because I think that's where maximum panic is going to be. That's where a lot of resting liquidity is going to be. And you have to think, if we can sweep the highs here, trap the longs over here, you know, I imagine a lot of the bears who are here at 30k, as soon as that breaks, they're going to be something like, do you know what, well, we're going straight down to 10k. You know, I would imagine that any kind of break of this, they would say something like, oh, well, I've got confirmation of a bear market, something along those lines. And then you know, then we run it back up here, and then we maybe test some higher price levels and then see where we're at. So that would be my key contention for how we you know, bottom. And the way that the price action has come this far at the minute, because we've broke 40 and we're looking very impulsive, okay, it does look to me that you know, we definitely reach 30k for sure. How we get there, like I said, I'm not exactly sure. Maybe we just chop around here. Maybe we just go straight down. But the fact that, you know, we're at 33k, there is nothing here at the moment that tells me that we need to stop. The only thing that we can get is some kind of relief, okay, in the short term, just because we're looking pretty overstretched on the daily, on the RSI and whatnot, and a lot of indicators, okay, and this has been a very violent move down. So, you know, I'm expecting, you know, strong volatility both to the upside and to the downside. But also what I would be looking out for, you know, is this move down here, okay, if we do eventually chop 30 and we undercut the lows, take out that resting liquidity, is there anything that we can find in terms of fib extension and fib numbers? Okay, well, we can. So if we actually have a look at some of the extensions, okay, we can see, right, that a 1-to-1 extension, we tend to look at the key extensions, right, from the impulsive leg down in December, because this was so shallow, that puts the 1-to-1 at about $25,000. So we can mark this area over here, okay? And also if we take that liquidation cascade impulse and we basically, you know, come over here and eventually and have a look at a 1.6 extension of this wave, so we come down here, you can see again that puts us at that similar region over here at about $25,000, okay? So that's something that we want to look out for. We have maybe a little bit of price action over here, okay, which I'm not saying that's going to be like strong support, but, you know, something that we probably want to look out for at these levels. So yeah, just something to think about over here. Now, in terms of, you know, key moving averages, what do we know from past and historical data? We can see that on the weekly 200 moving average, okay, is always historically just about the best opportunity that you are going to get to buy Bitcoin, okay, at cheap prices. I can show you, this is this is the Coinbase chart, right? But I think when you go back through historical data even further, you can see that this is also true further in the past. But you can see here, this marked the bottom down here at 3,200. This COVID low, we did puncture through it, came straight back up through it. If you puncture through key support or moving averages or whatnot, you want to see at least some sort of reversal immediately, very quickly, to give you a sign that that was basically some sort of fake out. Now, again, let's say that sort of trickles up here and that line is coming up at around those levels. You can see that that again is going to coincide with something around that $25,000, $22,000, $26,000 level, right? Depending on where we get there. Because if this takes longer to basically puncture through 30 and this scenario plays out, this is going to be, you know, coming in with a lot of confluence, okay? And you have to remember as well that BTC has never, right, in terms of market cycles, come back and corrected below its previous all-time high. So the cycle peaks that we got in 2017, the cycle peaks in 2013 and whatnot, and 2000 and those dates, you can see that basically we've never actually come back and retested those levels. Okay, we never overshoot this. So which, another reason that makes me think that, you know, somewhere between 20 and 30, you know, might be a good area to look out for. But, you know, BTC can definitely do crazy things before. This market cycle has seen a lot of patterns and a lot of things play out, and a lot of waves play out in unexpected ways. So, you know, just be expected, just be ready for any unexpected moves, you know, in some of these in some of these coins and in Bitcoin. So yeah, that would be my primary scenario at the moment with the way things are looking. Okay, and yeah, and you know, I think the best way to get here, by the way, okay, will be some sort of fairly quick capitulation. So if we're able to basically come down here, okay, and get out down here quite fast, I imagine that would be a good scenario to basically, like I said, take out these stops, take out these resting liquidities where people think as soon as we go below 30, bear market confirmed, etc., then swing it back up, okay? So you have to think as well, in the same way that the big boys and the whales play the game. They want ways of basically getting cheap Bitcoin. Clearly, it was way too expensive over here at 69K, but over here it's going to present a much more favorable opportunity, okay? And then maybe we can start to carve out some kind of bottom here where we get a big wick, or, you know, something like this where we got in March 2020, or we basically get, you know, sustained move to the downside, pausing, and maybe form some kind of base and then swing it back to the upside, at which point we could basically say, you know, maybe we can start to retest some of these other key levels, maybe reclaim 30, start to move up a bit higher, and, you know, that's pretty much that. But you know, at least for the recent short near term, that's the scenario that I would be looking at for Bitcoin as the most likely. So the last thing to add to this scenario as well is the 55 EMA fib, okay, which again is a key is a key moving average. Okay, we can see that we came down here to this cycle low at about the March COVID 2020 crash, and again we got that here. Okay, I'm on the Coinbase chart, so this doesn't stretch back far enough, but I can tell you that this was holding a support in these regions over here. And again, if you look at the monthly, if we start to close January below the yellow, which is the 21 monthly EMA, okay, that usually results, okay, in a move down to the next band, and you can see that we got that over here, we got that over here, and, you know, that next level again would be coming in somewhere hot at around $23,000 if we got there quite quick. But, you know, still going to be trending up at somewhere again between 20 and 30k. So like I said, this is why at the moment, given recent price action, this would be my number one base case scenario. Scenario number two, okay, is my less likely scenario, okay, which is essentially form some sort of flat correction pattern, and we are basically going to stay range bound, and 30k just provides that strong floor support that we've seen, okay, and we basically move somewhere in between here, play within this range, and essentially we eventually break out whenever that time comes. And like I said, 30k is basically that massive floor support. Maybe we would get some sort of, you know, move over here, and we would undercut this really quickly in the same way that we did that here. But really, you know, we get that move and we really stay within these ranges predominantly, and we don't come down to sort of those mid 20s. And essentially maybe we range bound, you know, and hit the EQs and the middle of the range a few times, and then we break out whenever we break out. Okay, that's definitely a possibility, because you have to look at 30k as strong support, but I do think that you know, the undershooting these lows as we came up here and trapped the longs. I do think it makes sense to basically take out these lows, scare everyone, and then start swinging it back to the upside. To me, that still seems like the most likely scenario. The last scenario, which is scenario number 3, okay, would be that we have now entered basically some sort of, you know, long downtrend. We're in a bear market, and now we're repeating, okay, you know, what we essentially did in every other last cycle, where in terms of the 4-year cycle, right, people say that the 4-year cycle is dead, but I think what you can take from that, and I think it is important to look at all sides of, you know, the coin, is, you know, it doesn't have to repeat itself exactly as it did in the past in terms of like percentage terms and exact timing, right? But what that does tell you in terms of the 4-year cycle is that we do tend to peak at the end of, you know, every 4 years, from 2017, 2013, 2021 now, okay? And what we're doing at the minute is we're now just forming our bear market, and we're starting to come down to lower prices, okay? So that's definitely, you know, the sort of rhyming that we would have. And, you know, we might not have got exactly the same kind of top, but we did get a sustained big parabolic move, and now we're basically correcting the parabolic move, and we're starting to come down back to the downside. So, you know, we want to be looking at that as a potential scenario to play out, okay? Definitely something that isn't off the cards. Now, what that would mean is that basically we spend most of 2022 in a downtrend, and, you know, essentially we just form some patterns which take us down to, you know, ultimate lows of somewhere like 13k, 14k, 16k. But like I said, to me, this doesn't seem like the most reasonable scenario to at the very moment. What would be nice confirmation of that and things to look out for was if we start to come out and retest these areas of, say, like 52 or 40k, and we just start to see these failed rallies playing out, and we start to create lower lows, right? That's when we're creating, for me, real bear market structure. And then we can start to move, you know, something like this, and then we maybe form some bigger final drop, would be the indication of the sort of patterns that you're looking out for. I think if we come down quite quickly, okay, then, you know, it might be that, you know, scenarios 1 or 2, you know, maybe scenario 1 in particular is more likely. But if we start to have a lot of failed rallies, and that creates the structure for a downtrend, then, you know, you have to be aware of that, right? So that's how we want to be playing, you know, that sort of cycle. But it also makes sense to me that if we got some sort of diminished returns to the upside, and I say only because, you know, 200% move from last market cycle peak is a lot, okay, don't get me wrong, but it would make sense to me that if we don't, you know, we're expected to see usually like 10, 15, 5x at least. We haven't seen that. So we haven't got this massive move to the upside. It would make sense to me that, you know, having a diminished bear market would also make sense, where you can see here that we can, if we do come down to sort of 25, 26k, okay, that would represent a 65, you know, percent decrease from the highs. That, you know, if we do get like another move to like, say, 10k to like 84%, 80% decline, to me that does seem like, you know, a more unlikely outcome. And if we always talk about, you know, higher market cap and maturing assets, that, you know, if we do get Bitcoin coming up here to these big highs at 66k, then yeah, and then if we do look at, you know, Bitcoin being a more mature asset, and we get some diminished volatility or returns both to the upside and to the downside, it would make sense to me that if we do come up here, that, you know, coming down here to these lows would be like really, really low, in my opinion. Definitely a possibility to look out for. I think any one of these 3 possibilities is the most likely possibility. I know it sounds like where you're giving me 3 possibilities, and you're basically saying, oh, it could kind of stop now, kind of go a little bit lower, or, you know, make this, you know, completely crash over here. But I'm just trying to give you what I think is the most likely scenario based on what we can see at the minute in the charts, okay? So that's how I'd be looking at current chart patterns, right? So definitely the ones that I'd be looking out for is the most likely. Now, hopefully you got something from this video, and, you know, you learned something new, and it helps you better equip hopefully you got something new out of this video and you learned something new, and it allows you to be at least a little bit better prepared and better equipped if we do see those lower prices, and maybe some patterns that we can look out for, moving on to the downside, and so that you're basically prepared either way, whatever way we turn and whatever way we go. Okay, so if you like the video, please go ahead and give me a like down below, subscribe to the channel, share the content if you find it really useful, and I will catch you all in the next video.